What's going on, guys? So, this is highly anticipated video. This might be the most simplest strategy I've ever seen when futures trading. Um, I did not create this strategy. This is from a member in the Discord, a member on the live stream. Uh, he went from $3,000 in an account. Last I looked, it went from 3,000 to 15,000 in the course of a couple weeks. So he more than 4x'd his money. And yeah, it's so simple. If you have questions about this, there's a link in the description. It goes to our free Discord. You could ask him in there. His name's Keith. Um, I made this video. He knows I'm making it. And I'm going to explain it my best way and then offer maybe some ideas, take it even further. But yeah, I mean, that's pretty much it. So let me just jump into it. Basically, it works on Tradeovate. I have to see why it's different. He uses RSI now. He started with stochastics and then went to RSI. Why I have to look into it more is the RSI is a different number on TradingView, and I don't know why. So I got to look into it. But the gist of the strategy, by the way, watch to the end because I'm going to add some tweaks to it as well. The gist of the strategy is a 15-minute chart. So this is on the 5. We go to the 15-minute chart. The idea of the strategy is when the RSI goes under 30, he starts to DCA in micros. So he plays micros and he's playing one at a time. So he uses MES, one micro at a time, and he basically waits until the candle closes and you are under 30. So as an example of today or the yesterday that just happened, he would start buying. This candle closed 78. We're under. And then the ATR is 10.7. So you're looking for about 10 points. Now, he might not wait exactly until it closes. Maybe he just waits till it trades below. So you'd be adding somewhere on this wick, right? You're looking for 10 points because that's the ATR at this given moment is about 10 points. So argument's sake, say you got in at 56, 78. You're looking to get out at 88. So your target is right up here, basically at the top of this wick is the target. Would you get filled at this wick? Probably not, but you would get filled. And I'll go through that. So basically you would have added, and then as it goes much lower, he starts to add another micro. So it's DCA, but you got to watch out. You got to make sure there's no news hitting. You got to look at the current environment as well. It's not just a blind DCA. But as you travel down, you would have added, me personally, if I'm in at, say, 78, I'm probably going to add at, 72. I'll probably add another one. We go to 70, I'm probably adding another one. We go to 65, I'm probably adding another one. This whole time, your original target is back up at 88. He states in his rules that he's looking for the original target. So as you're adding down, and then sure enough, we come back, you're either going to get filled here or you're going to get filled right here at 88. Trade works out great. And then later on in the day, you have another opportunity on this candle. RSI goes below. ATR is at 11. So you'd be buying somewhere probably around here at, call it 68. And now you're looking for 79. Obviously, we come back, we hit 79. Probably would have added, you probably would have bought here, and you probably would have added somewhere around here at maybe 65 ish. So you would have had one ad, and then you would have got out, and your trades would have been done for the day. Um, you would have went 2 for 2. I know you can also do it on the flip side if you go above. I don't know if he trades pre-market. That's something you got to ask. I personally do not trade pre-market. So he started this originally on the stochastics. And stochastics had to be below 21 using using K only. He got rid of the D, used K only, and you would have also entered down here and then gone up. Both trades. The only thing is the RSI was low. Stochastics were not low enough for him to enter on his old model. It's interesting if you combine both, you would have only gotten one trade today. My other thing that I was looking for is possibly argument say you got in, this is 10:15, right? What if you then zoom to a lower time frame? So he was on the 10:15 candle, right? That would have originally got you in. I am curious if, yeah, so that candle would have been right. I'm just trying to map it out. I am wondering if you went and you were like, okay, we are low enough in this area, it's a buy, right? But this candle ends at 73. That's this wick. I was curious if you then went down on the lower time frames and said, hey, I'm only going to buy, I'm going to, it's activated for a purchase, but then you also go to the lower time frames and say, all right, the RSI also has to be below 30 on the 3 minute. And then instead of buying here, you would have ended up buying down here and gotten a better entry and wouldn't have had to DCA. These are things that you have to back test to kind of make it even better. Or it may not make it better. I was just wondering that if you zoomed out where it's a buy and then you go to find your actual entry on maybe the 2 minute or the 3 minute, if that provides a better entry for you so you're not purchasing on the 15, but you're green lit to buy, so you're definitely getting in, but you're just looking for the right spot on the lower time frame to get a better entry, which would make it so you didn't have to DCA on this candle. Would that work every time? I don't know, but Keith is obviously making money doing what he's doing. Like I said, it started on stochastics, overbought. He would start DCAing, and then, he'd start DCAing down here, and it works. He's the only one I know that's doing this personally on the 15-minute chart. It seems to be working. He's using ATR to find what his profit target is, and it's super simple. It's not hard. The biggest thing is being able to wait to just purchase is probably the biggest thing to do. It's kind of like you're just waiting all day for, RSI to drop. I mean, you could be sitting here for a very long time and you may not trade. Does it trade every day? Once got back under here. And then, you could be waiting maybe not all the rest of the day. Like you could be done at 10:30. It's definitely interesting. Well, not 10:30 because obviously you would have been bought on the you would have started buying and shorting on the high side and then came back down. But yeah, I'm just looking at a quick back test of this. It's definitely interesting. It definitely works because he's already proven it. He went from 3,000 to 15,000 in less than a month. Um, and that's pretty much it. Do I think you could tweak it? Probably. Probably. If you took and you were greenlit for a buy and then you just search for your entry on the lower time frame, yeah, 100%. It could probably be a little bit better. I don't know exactly what the rules are because you don't want to miss out. Obviously, once you're low, you don't want to go on the lower time frame. And argument's sake, we pop here and you're waiting for a little bit better of an entry and you lose out. That's not what the model is about. But it's maybe you come down to the lower time frame and say, hey, listen, if we break, over this area, I'm in. Otherwise I'm looking for us to go below, 30 on the RSI on the 3 minute or the 1 minute. And, I'm going to grab down there. So it's one of those things that you could probably tweak it a little bit, but I actually really like this. I've traded it on Friday a few times, and I traded it on Thursday a few times, and I haven't lost, um, which is even more interesting. The fact that I haven't lost on it. Did I make a ton of money? No, but I made a couple $100, which was great. I could always scale up because I started off doing one micro. Maybe I start off doing three and then three. The one thing you got to watch out for is if you're on prop firms, you're going to have some type of drawdown, and that might hurt you a little bit. But I think the trades do work out. You just got to watch out that there's no big news because the news can obviously, if you're DCAing against bad news and you keep adding, you're probably going to lose, just like any strategy. The same way the other way. If you have good news and you keep, you know, shorting it, news trumps all. So obviously just step away from everything if there's news. But when there's not news and the market's just kind of moving, seems like it works. What would my stop be? That's the biggest question. What would my stop be? I think I would look and take a stop based on, I would probably, me personally, like how I'm going to trade this, because I am going to trade this going forward. I have an account for this. I don't really know. I'm probably going to add like 3 times. And then I'll probably see where I'm at after 3 ads. So I'll have my purchase, my 3 ads. Because you got to remember, you're doing micros, which is not a lot of money. So you could do like, me personally, I'm probably going to do 3 and then, add 3 more times. When trading the 15-minute chart, it takes a big move to cause RSI to go down. So typically, yeah, it does push back up. But that's all up to you. I don't know where my stop would be. My risk settings are different. And like I said, this isn't financial advice. It's all up to you. It's a strategy he uses. And my goal would be to take the foundation and then kind of do your own thing with it. That's pretty much where I'd go with this video is, it's a foundation and then you kind of could put your own spin on it. If you have any questions, come in the Discord, ask on the live stream, and that's pretty much it. Keith will probably get back to you.